Hi, everyone. This is Roger Bryan, and I want to talk about the best cryptocurrency investment strategies right now. So the first one has been the most popular through 2017 into 2018, and it's still probably the easiest and one of the best, even in a volatile market, and that is to buy and hold. As this industry is in its infancy, you're having an opportunity to invest in blockchain projects before the world fully embraces blockchain technology. It's like investing in internet companies in the late 90s. You were going to go through some trials and tribulations between 99, 2000, 2001, 2002, but the opportunity to pick up an Amazon before Amazon was Amazon is really where the buy and hold strategy comes in. The one problem that people have with buy and hold is they have to realize that that is a multi-year commitment and not a 90-day commitment to wealth creation. So when you're going to implement that strategy, you should be looking at, can I put this money away into this asset and allow it to sit for 2 to 3 to 5 years and allow it to become what it is going to become. Amazon didn't become what it is today for about a decade, but it would have been really nice to be in it early, and that's what the buy and hold strategy really is. The next one is trading. Trading is very popular in this space because of its high volatility. An educated trader can make a lot of money in this space through the use of proper strategies such as stop losses and automated calls on pricing that take advantage of some of the more normalized swings in investing. One of the problems with trading is that moving between one asset to another in a volatile market, especially when both pairs are typically moving in the same direction in the market, makes it hard. You're seeing more new styles of USD or fiat-based currencies that stay more stable, that allow you to trade in and out. There's some great books out there that you can read. In fact, I thought I had one sitting on my desk, called Market Wizards. It's like an interview from the 80s with all of the top traders, and the strategies that they use in that are still very viable today. The next one is arbitrage. It's not complicated, even though it's a word that you might not know a lot about. It's the idea of registering with multiple different platforms and taking advantage of 5 to 7% differentials in price so that you can buy an asset at one market price, transfer it over to another, and liquidate it. Now, it doesn't always work. Price swings can happen pretty substantially in a short amount of time, and that those arbitrage margins can begin to close pretty quick as people play that game. But if you're quick and you're paying attention, there is a chance to make 5 to 7% on your money pretty instantly by moving assets between different exchanges and playing in those different price points. The next one was the most popular one of 2017, and it's kind of transitioning in 2018, and that's the ICO, or the initial coin offering. It's the idea of investing in projects before they come to market, before they launch platforms, giving them capital to do what they're going to do in exchange for some type of token that will give you access to some type of network in the future. I think this concept is kind of dying, and it's kind of going the way of securitized offers, meaning Reg A in the United States, which is kind of like a step down from a formal Reg S IPO, but it gives you an opportunity to sometimes buy equity in a company and then ride that valuation as the company begins to grow and reports better earnings that you actually own a piece, or you can get dividends off of, which is a great investment strategy in any market. The next one is more of a tactic than it is a strategy. And what I mean is that it can be used in holding, trading, arbitrage, ICO, and it's called event investing. So some of the major events that you can invest against are, say, a company does an ICO, they raise a bunch of money, and then the day that they list on a new exchange, if there is drawn demand on that asset, and you can be first in line with buy orders on it, sometimes you can buy it at a discounted rate from where it may close at the end of the first day. Sorry, it never closes, but where it may peak at the end of the first day, giving you an opportunity to make margin on the buy and the sale price based on an event. Other events are when like actual events, meaning people have conferences, they make major announcements, they make major partnerships, they update their technology. All of those different things, they burn coins, which is one of my favorite ways to drive coin values these days. So event investing is a tactic that you can use by staying aware of the news and investing in the right assets at the right time. Another one is mining. You can buy physical equipment, or you can go in on partnership with organizations, invest your cryptocurrency with them in order to throw off cash flow in a monthly recurring revenue style, or even a daily recurring revenue style with Bitcoin mining, or other mining operations. It's got a heavy upfront cost, and the technology becomes out of date really, really fast. So you've got to be aware of that, but it is one investment strategy that some people use. Another one is staking or masternodes. That's kind of like a proof of stake style cash flow model where you own a certain number of coins, you set them up in a specific wallet connected to a specific network, sometimes set up through a virtual private server or what's called a masternode, meaning that you own a large amount of a specific coin to get a higher return on that hold. And then every day, or even sometimes I've got a masternode writing on a screen above me, it's paid me out, say 1, 2, 3, 4, 5, 6, 7 times today. And it'll continue to do that every day, which is a great way to generate cash flow in a market. One of the things that I talk about in investing, any type of investing, specifically cryptocurrency investing, is that it's got some differences from traditional investing in that it is more macro market based on price fluctuation than it is individual asset based price fluctuations. But in the consensus that it is an investment, you have to look at the different strategies. I always look at 4 different strategies in any investment system that I have. I want to own some of the big caps. Those are going to be ways that I'm going to create wealth. I want to do some diversification or some index investing. That's the way that I'm going to build in retirement. I want to do some speculation inside of it to take advantage of the biggest gaining opportunities, and that's going to be the trading in the ICOs. And I also want cash flow. In a normal portfolio, that might be real estate or dividend investing. In this space, it's mining and it's masternodes. If you look at it like a normal investment channel, you'll make smarter decisions, follow the strategies that I outline, and you're going to have an opportunity to have some success. Now, this isn't investing advice. This is just some strategies that we implement on our own and kind of an overview of things that you might be able to do yourself. I really appreciate you taking the time to watch this video. If you like what we had to say here, please subscribe to the channel. We've always got new content coming up. Or click the link below to take advantage of some of the other free trainings that we have. Really appreciate you. Peace.